Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Tuesday, the 18th of February, Bull versus Bear webinar. Steve Mighty here on the call for Trade Day. Welcome, everyone. I'm going to go through Monday run through, even though it's Tuesday with the US holiday yesterday. We'll go for what we normally do on a Monday. So we'll take a look at the bigger picture, what we've had, what we've got coming up this week to give us an idea of the shape of the week, where it's going to be the important potential volatility points as we go through into this week. So we'll take a look at the macro matters report. Remember, you get this in the members area in the middle section. This is published at the weekend, and the macro matters and the macro summary. So we'll go through these, and then we'll take a look at the bigger picture outlook for the week. So the macro matters, remember, is just the bigger version. The more in-depth version, and this is the more condensed version, so the more in-depth version of the macro matters. So last week we had a good week for markets, for the equity markets. Nasdaq was up 2.6%, S&P up 1.5%, Dow up 0.5% after early losses due to concerns around tariffs, and those tariff concerns easing a little bit throughout the week. Markets remain resilient despite announcement of 25% tariffs on steel and aluminium into the US. Despite that, comfort in the delay of reciprocal tariffs, seeing a rebound through the week. Jerome Powell didn't really tell us anything more in the testimonies to Congress last week. Looks like we're on wait and see approach, on hold for now with respect to any further rate cuts going into the year. And US inflation was actually ticked up above expected, so that was a little bit of a concern, slightly higher than expected in January. So that keeps the Fed a little bit on the back foot right here, right now. Going into this week, the main really points we're going to be watching are the minutes on Wednesday, the Fed meeting minutes from their January meeting. We get those on Wednesday, and then we get the PMI reports. We go down to the so we'll see in the central bank side, Federal Open Market Committee minutes on Wednesday. We do get the RBA, Reserve Bank of Australia as well, and the Bank of China Tuesday and Thursday. And on the data side, it's that global flash PMI is really the big data that we're going to get on Friday. It's fairly light for the US. Obviously, it was the holiday yesterday. RBA in here. Actually, we already had the RBA, excuse me. UK employment report already had that. Canadian CPI this afternoon. Nothing of note from the US. Japanese trade report, UK CPI, PPI, and RPI. Fed minutes. So the Fed minutes really the first thing of the week, Wednesday. And then German PPI, EU consumer confidence. None of this really impacted us. Global flash PMI, that's going to be the most interesting stuff we're going to be looking at. That's the flash PMI, the early data that we get from S&P Global. That's the real focus of the week. So other than that, it's a fairly light week on the US data as we go into the week in here. So very, very light week. On the earnings side, we say we're not really focusing on earnings at the moment. Most of the big earnings are already gone. We do have a couple of interests this week, and then next week is the big one. We're getting NVIDIA. But this week, just to focus here quickly, nothing of real note today, tomorrow, but I think we're watching just some of the retailers. Walmart on Thursday, and then actually it's not till next week. We'll get Home Depot on Tuesday. And I think also if I go to next week, I think we have NVIDIA. I think it's Wednesday next week. So nothing really major there. As I say, Walmart coming up a little bit later this week. Let me just refresh this because we didn't have the morning briefing Americas. No, still not out in here at the moment. But nevertheless, the focus on the European briefing was on so this is the two big unknowns really. So obviously we've got Wednesday, we have the FOMC. The ongoing things, and if you were around trading in it's very different trading in the Trump era. If you were around for the last Trump presidency, I mentioned this before. So we have a lot of geopolitical unknowns waving around. Obviously, the tariffs, things can come at any time. A tweet from Trump can change things very, very quickly. So potential volatility is heightened in here. And obviously, at the moment, we have this kind of news from the weekend of the US and Russia moving ahead with talks without Ukraine, without Europe in here, and that's kind of rattled certainly the political scene here in Europe in here. Certainly, there's been a lot. I read a lot on this over the weekend. Real uncertainty about where this goes. Emergency meeting of some European powers yesterday. And we see where it's going to go, where it's another bargaining tool from the Trump administration to get Europe to pay up more for their own defense, whatever it means. But it's certainly it's caused some issues, on the European side politically, and then also, but it's been positive actually. The stock indices, peace is seen as good, even if it might come at a cost. And also, defence stocks are rallying in Europe because it means potentially more spend on defence in Europe for Europe to defend its borders. So it's actually turning out to be a net positive for markets in here at the moment. Stocks are up in here this morning in Europe. However, a little bit of uncertainty goes with it of where we're going to go with this and what it looks like for the future of Ukraine, what it looks like for the future of Europe, and what it looks like for the future of the world order. So that's all happening at the moment. So US and Russia's top diplomats are meeting in Saudi Arabia. And then we also have, these talks between European powers, and lots coming out on Europe. So it's going to be interesting how it plays out. The other thing we have going on coming up at this weekend is that one of obviously the more important components of Europe is Germany, and they go to the polls. They go to election this weekend, and it looks like potentially that there's going to be a change in power there. So that's going to be interesting to see how that plays out as well going into this week. So stocks rise and US-Russia talks to end Ukraine war. US Treasury yields slightly higher. This is from Fed's Waller, as signals rates on hold for the moment in here. So Fed's Waller from the Fed in here speaking and saying that looking for rates to be on hold until we see inflation start to come down. European shares hit record high on Ukraine peace hopes in here, and as I say, led higher in here by defence spending. Europe's defence up as Washington meets Moscow. You see in here that Europe's defence stocks are already up 20% already for the year and up another 1% in here this morning. So being led higher by European defence stocks. There's the Waller headline. Fed's Waller favours pausing rates until inflation bump fades. So looking for inflation to start to move back lower again. And Chinese stocks independently as well up, outside everything that we've got going on in US and Europe in here. Chinese stocks rally as Z vows support for private firms. So a positive, softer stance towards tech follows a multi-year crackdown. So they've been cracking down on tech in here, but some positive sound bites from President Xi over the weekend in here, and seeing a positives for China. So if we look where we are, Hang Seng was actually up 1.6% this morning, with the Nikkei up 0.25%. European bourses this morning, little change, but they had hit new record levels in here going into yesterday and earlier today. And if you look at US stocks in here, up as well this morning, so about between 3 and 4 tenths higher for both the S&P and the Nasdaq so far today. Turning our attention to the interest rate markets, nothing really changing here. We've been focusing on this for the last week or two in here. I'm not spending a lot of time on it because this is really not changing. Pretty much zero chance expected of a rate cut at the March meeting. We have to jump out to June before we now have pretty much a 50-50 chance of either a rate cut in June or July, kind of pricing in either June or July, probably for the rate cut more, maybe slightly more chance in July in here, with a more like a 60% chance. So only a 40% chance rates are unchanged by July, but kind of 50-50 in here whether they're unchanged by June. So looking for one rate cut in the middle of the year. If we go to December, the end of the year, you'll see if we add these two columns here together, 35 and 16, it's like basically 51% in here for either unchanged or one rate cut. So the market's still pricing only 50-50 of maybe only one rate cut for the year, and that likely coming in June, July. So the market only pricing one rate cut at the moment. Remember the Fed's last dot plot chart, which will be of interest to us, even though we've got very little expectation in March. So still about a month away in here for the Fed's next meeting. Even though we're not really expecting any rate cuts, I'm pretty sure we get the next dot plot chart. We haven't had a dot plot chart, I think, since the end of last year. So I think the next meeting sees the dot plot chart. We didn't get one in January. So I think next meetings on the March meeting, we'll get the dot plot chart. And it'll be interesting because at the moment, the market's only pricing in one rate cut. At the last meeting, at the last dot plot chart at the end of last year, the Fed were indicating potential for 2 rate cuts. On the yield side, we did get a fallback lower in yield last week, so we did get the market edging up to higher yields and back to lower yields. We have a very slight nudge up in yields, probably helped higher in here by those Waller comments in here, popping this back to slightly higher yields. But generally speaking, in here, the theme is still to lower yields. So we also had that pushed back up to higher yields and fell back lower. Right from, I did point out this area here around. So really, we wanted it to contain below 460, but the market then was contained below this little swing high here. That's at 466 and came back down to lower yields. So looking for yields to move back lower. That's lower yields, higher prices, which could be supportive of stocks. So we did pop back up higher in price. So still pointing higher in price, higher prices, lower yields should be supportive of stocks. And stocks, as we said, in indices back higher this morning. They, even though it was a holiday yesterday, we only had a partial session on futures, and we had a strong move up at the end of last week, holding on to that at the beginning of this week in the partial day yesterday, and obviously pushing higher. And if we go and look, we're basically right up close to recent and all-time highs for both NASDAQ and the S&P in here. And if we go and take a look in here, here's the S&P. So we're just off of the high here that was posted early this year. In January, that peak there being 61.62 and a quarter, and then the all-time high in here on this contract, on the March contract, 61.78.75. Those are realistic targets for today. So we could be making all-time highs in here today. On the future, on the NASDAQ in here, we're already through. We're at new highs for the year already and closing in on the all-time high. That is from the middle of December. That is up at 22,450. So there's a real chance we go and hit that today. Those are the upside targets. If you want upside targets above those targets in here, do go check out the our reports in here. And there, remember the left-hand column, and you'll see we've got various Fibonacci extension targets in here for both the S&P and NASDAQ. You see them on the chart, and those are outlined here in the table. So go and take a look at those. The immediate focus is going to be on the all-time highs. So we've got 61.62 and a quarter and 61.78 and three quarters here for the S&P, the year-to-date highs or the January highs, and also the all-time high, and then the all-time high at 22,450, and then above that we've got some extension levels for you there in the table. So checking those out. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you with another Bull versus Bear webinar tomorrow, Wednesday. Bye.